Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there. Safe day. Let's take a look at one of our 4 agreements. Always do your best. Take action on your ideas. Doing your best means to take action. You have many great ideas in your head. But without action upon an idea, there'll be no manifestation, no results, and no reward. I'm here today with my partner, Steve Rhodes. And folks, if you haven't checked out our program in the morning, Steve kicks us off each and every trading day, 9 a.m. Eastern Time. And Steve and I have a program, 10 to 11. You can get it all right at TFNN. Of course, if you're in your car, if you're anywhere in the world, just on your cell phone, folks, go to TFNN.mobi. And
I get the opening call. You get the closing call.
That's a beautiful thing, isn't it?
We got the bookmarks here.
That bookmarks, big time.
Bookends, yeah.
I like that, no doubt. Market-wise, let's take a look at it out here. We had the Dow up 4, NASDAQ up 4. Let's check that out. Both of them up 4. Give me a break. S&Ps were flat. Gold contract down $11.20, trading at $1,658 an ounce. Silver off 24 cents at $30.72 an ounce. Platinum $1,517. Copper down 3 pennies, trading out at $3.43 a pound. Light sweet crude down $1.24. We'll get back to that at $95.09 a barrel. Bonds down 9 ticks at $148.30. King dollar up 16 ticks. Not enough price spread on the way up though. At 81.55. Euro down 34 at 125.30. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, what do we have? What are you having for breakfast? Pancake? Flat. Flat. We're flat again, folks.
Doji.
A doji. Oh, yeah, you get 2 dojis in a row now. So we're at 1410. We did all the 502 million shares. Bottom line, there's no one in the store. We're up at the highs. But you know what? It's going to need more volume, more strength in order to break topside. Dow Industrial, same setup with the Dow, $4, big deal. You go look at the NASDAQ, the composite first, and inside the composite, we're trading at 3081, and volume out there. Now, the composite volume went down dramatically. The composite, we did 1.267 billion today.
Yeah.
We should be banging 2.2 billion.
Well, and when you take a look at the NDX, if you go take a look at Apple and how it's trading.
Yes.
But whatever Helicopter Ben decides to do on Friday.
Yes.
Shouldn't necessarily impact Apple if it's got all that momentum that they've got there. And yet today you take a look at Apple and it's also just still sitting there.
No, it's flat. There's no doubt about it. And if we do go over it for a second, Steve and I were just looking at the story, and this is where it's going to get real. Okay, so picture what you have happening here, folks. We have Wyoming, right? Jackson Hole, Friday.
Yes.
So the Jackson Hole deal, folks, has to do with central bankers coming into Jackson Hole, talk about, most of the time
how to control the world.
They used to be able to talk about how good things are. Now the bottom line is that they have to talk about where they think the problems are coming in. Now, in this particular case, of course, they want to talk about Europe. Well, guess what? Because Draghi, good old Mario, he's staying in Europe, which he probably should stay because there's problems. And, so he's not coming to Jackson Hole. Coming across the tape this afternoon is that you have the Queen of Germany, Angela Merkel, bottom line, and Mario Monti. They're clashing over how the debt crisis is going to basically get fixed.
Yeah.
Monty wants the they want they want to get a banking license into the ECB so they can do the bond buying. And Merkel's saying no, I don't see that happening.
She wants to pull the strings.
Yeah.
Really, that's what it boils down to is who's in charge here. Who's the CEO? Who's the majority shareholder?
Yeah, no doubt,
right?
no doubt.
And
I'll tell you, I cannot see Germany. What has happened in Europe land, folks, is that they've given up sovereignty anyway. Just putting, the euro in business. What this is about is giving up more sovereignty, and I just don't see it. That is strictly, just to me, it's common sense. It's like, oh, really? You're going to go back to the citizens in Germany, which is the wealthiest country in Europe, and the most industrious,
yes.
and you're going to turn around and say, hey, listen, guess what? You're going to give up your sovereignty now so that everyone else can lay around. Oh, really? Go to the Riviera and lay back? I just don't see it. And who knows how it's going to play out, folks? Meaning, I don't see that, period. When I say how it's going to play out, it's like, how are they going to do this so that they can print money? Because that's what they have to do to get out of it.
Yeah. Well, Draghi's saying he's back there. He's meeting with the PR firm.
Well, he's definitely...
That's not the printing firm, folks. That's the PR firm.
Yeah.
Because these guys are good at putting out a public relations message.
No, they're huge. They're huge. And so the way the numbers are coming, now you have these arguments coming out, today's the 29th of August. September 6th, the bottom line is that, they supposedly supposed to have something together. So,
yeah. So we're waiting on the, the comments from Bernanke at about 10 o'clock in the morning on Friday.
Right.
And, of course, that might not give us anything.
Well,
and then you're going to have to wait till September 6th.
Yeah, the speculation, absolutely. The speculation is that, Jackson Hole, folks, this is coming off Mohammed Al-Arian at PIMCO. His speculation is that, now this gets interesting because his speculation, this came out yesterday, his speculation was that Bernanke's going to say nothing other than what he said at the Fed minutes, okay? Now, Bill Gross, which is actually his boss, I think, even though they're both CEOs,
that's right, yeah,
his boss came out on CNBC today saying that either Bernanke's going to announce a QE3 in Wyoming or within a couple weeks.
Yeah.
And the real question is, okay, what is the QE3? What are they going to do?
Yeah.
As we said this morning, we were talking about this morning, folks, and this morning, bottom line is that, Operation Twist could be a QE3.
Yeah. Oh, maybe we're going to go ahead and up our funding to the IMF so they can give it to the ECB.
Well, that would be there's plenty of cash out here. So there's plenty of cash out here. Yeah. The real question is, how do they, how do they get it done? We'll find out. To me, you know what? The bottom line is that, where are we at in the S&P? We're at 1410 in the S&P. And is a problem?
Well, yeah, that's the thing.
Okay.
No
What's the problem?
Yeah, no problem.
What's the problem?
No problem.
Let's go to Joe in Boston. Hey, Joe, what's going on?
Hey, Tom, what's going on?
How you doing, man?
Yeah. Well, I'm doing all right.
Yeah? Are you out walking? What are you doing? I hear you banging the computer, aren't you?
No, I'm done for the day. That's it. So, hey, I got a question for you. Do you think by any chance Google's going to get back into China?
Yeah. Why? Because the way it traded today?
Yeah, because remember I called you yesterday on Baidu. Look what happened today.
Yeah, I heard Baidu got taken apart, right?
Yeah. Well, yeah. Remember I thought it was going to bounce a little higher. It didn't even just...
Yeah, come down 7. Look at that. We'll give you nothing to chance. Down $7, right? And what you had out here today, folks, is that Google, Google took out another B point. Yeah, it's pretty intense.
So I didn't know, just the way those were trading today, I think, maybe somebody might know something, or they might be coming out saying they're getting back in. I don't know.
Well, you've got those other guys over in China, Qihu or Qihu, Kihu, I think is the symbol on it.
Okay.
And so they're another big search engine outfit out there in China. They're the ones that are eating Baidu's lunch.
Oh, okay. Yeah, but I figured that maybe somehow, some way, if they get back in there, that's just going to be even more bearish for Biden.
That was a personal choice that they decided to get out. So it's like, over the time, well, let's put it this way. Google right now is traded at 688, and it does want to go tag 747. It's in the bar. It's gonna go tag it.
Right.
Google could be in there right now if it decided to give up some of its ethics. We'll see how that shakes out. It's
right, because,
that's the reality.
Yeah, because I think it was the old CEO that took him out, and now he's out. That was when I think Schmidt was in there or something. I don't know.
That would make sense, except that what you do have is that the initial deal, you get Larry Page and you got... who's the other guy? Sergey, okay? Mm-hmm. Initially, those guys are absolutely against the deal in China. They're not against the deal in China if they can do what they want to do. They're against, basically, what do you call it when you're,
Being censored.
They're being censored. Thank you.
Yeah.
So those guys were the catalyst behind it, you know. But hey, the bottom line is that, you know, China's going back to 1600. Maybe they need a Google in there now. They'll try anything.
All right.
Cooking brother, Steve Rhodes, Tom O'Brien. You stay right there. We'll come right back, folks.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the SEC, folks,
yes.
You have the Jobs Act. The Jobs Act, folks, that got passed in April. Inside the Jobs Act, what you had is that there's a lot of different proposals, but one of them in particular, this is going to be a change since 1934. So check this out, folks.
Pretty significant change.
It's huge, okay? And it's huge for two different reasons. We're, going to be involved in the change, TFNN in particular, for two different reasons. So what the change is this, is that the SEC voted today 4-1. Well, first off, what the law was saying is that flat out, they were going to change the law that since 1934, private equity funds could not advertise, folks. And so there's a difference. And when I say advertise, it's a full-blown advertisement, meaning that, you're saying what you're doing, you're bringing numbers out in. What has happened for years, of course, is that, CNBC, Bloomberg, when you see all these fund managers on there, that's what that's all about. What that's all about
that's
is
right.
They're defining a brand, and as they're defining that brand, they're saying, okay, this is who I am. Call me so that I can, basically make a pitch to you. But that pitch has to be in private, number one, and you have to make sure, and you got to make sure prior to the pitch that they're
qualified,
an accredited investor. Now, it's not hard to be an accredited investor. Accredited investor is you make a couple $100,000 a couple years. You're going to make it this year, or you have a net cap of $1 million excluding your house. Well, bottom line is that inside the jobs fund, they had that rule was supposed to go into effect July 6th. Well, SEC basically said they couldn't do it by July 6th. They voted on it today. They voted on 4-1 that the proposal is going to go into effect. It'll probably be another 30, 40 days. Now, what that means is that hedge funds are going to go from, well, here the press release in Bloomberg, anyway, says hedge funds may go from soliciting individual investors behind closed doors to conducting wide advertising campaigns without restrictions under the rule proposed by the SEC. So, two different things are happening. You know that we have brought up a Tiger Real Estate Opportunity Fund. And if you want to check that out, you can go over to our website at TFNN, and what you'll see there is that right on the front page, you'll see the banner, and you'll see the website. Now, that website, what you'll see is that it's generic, though.
That's right. Just kind of information about what's going on.
That's right. And what happens there is that before there's any information that can be released, you'll see that there's a form that has to be filled out that you are an accredited investor. Okay, so that is how business gets done now. So it's still basically just a generic type of deal, and that's how to see it done.
Yeah.
What the change you'll see is this. So watch what the change is, folks. What the change is that any hedge fund is going to be able to lay out their full business plan.
Yes.
On the air, on billboards, on wherever they want to do. And then what ends up happening is this, is that you still have to be an accredited investor, but what it does for the private equity community is that it gives you a platform to tell your story.
Yeah.
Okay. So at TFNN, of course, it's going to give us a platform to tell the story about the SEC, about the hedge fund, rather, the private real estate hedge fund. What it also does, though, is that, and it opens the door for larger funds. Right now, we have Direction Shares, we have Nadex, we have TD Ameritrade. What it does also, though, is it opens the deal for BlackRock. It opens the deal on an advertising basis for much larger funds.
Yeah, you start getting a lot of competition, because if you watch CNBC, you see Fidelity, you see Vanguard.
Right.
You see all those, and they pretty much had the market cornered with regard to being advertised.
Well, and also just bringing funds up.
That's right.
Okay?
That's right.
So what the difference is, as to the company itself, which is pretty cool, is that we will be getting those advertisers too. Because what ends up happening is that so it's interesting how the whole thing is playing out. Now that's the good part of it. And if you are interested in real estate happening in Florida, and you want to see what we're doing, I'm doing an online workshop tomorrow night, 6:30, and then I'm going to be in Boston 2 weeks from tomorrow night. You can check it out right at our website at TFNN, hit that banner. Now, that's the good part of it. The bad part of it is that what you will see, okay, is you'll see the and this is where you just better make sure that you vet whatever is out there.
Yeah.
Because what it means also is that who is behind the fund? What is the fund doing?
Yes.
And they'll be. Let's picture this. We know that there's problems with the Madoffs of the world,
yes, and
the PFGs of the world in the regulated area.
Yes.
Okay. You can and in the private area, folks, that is going to be a problem. And the key is, I'm hoping the key is that,
Now, the positive, some of the positives, I think out of this is that when you take a look at the housing industry, where we're in, what this is going to do, because we know what's going on behind the scenes with regard to other large funds out there and what they want to do.
Right.
And when you take a look at being able to just finally get the debts off the books of the banks, clear the slate, and get the get the housing industry in essence back on track. If you take a look, growth in housing every day. Every day we come in here, there's another, article that's coming in. And so this is going to, there's plenty of funds out there, that are going to start getting into that. I mean, that's who's mostly buying the properties right now.
Absolutely.
That's why Phoenix has gone from where they had the most inventory to
the least.
Yeah.
And the same with Vegas. And that's already happened. And what does happen, no doubt, in the real estate business is that cash flow wise for the communities, if my take is that we're off the bottom. We're off the bottom by a good 10%. If you happen to be in San Francisco, you could be listening to us right now. Their number, San Francisco, is up 18%.
Oh, yeah.
18%.
Yeah.
And that's a good number.
Yeah. So this is going to expedite things.
It is.
In my opinion. And for a while we have been talking about when we're taking a look at the yen. So we're taking a look at a number of different trades out there, right?
Right.
And just saying, no, the yen is a strong currency. So if you were over in Japan, one of the best trades out there is to take it, because the idea of buy low, sell high.
Yes.
Okay. But also the other idea behind that is make sure you take a strong asset and buy weak hands. That's when you take a look at mergers, acquisitions that go on out there. It's the strong hands that usually are getting the better deals. You want to come from a place of strength.
And I can tell you right now, Australia. So Australia, we happen to already have an investor in Australia. We may very well get a couple more. And that has to do with their Australian dollar is so strong.
Yeah, because now they get a double. Now they get a double benefit of it because they're, in the case of the yen, eventually the currency is going to weaken.
Yeah.
And they've now taken a strong asset, bought a weaker asset out there, which is also going to appreciate. And so you've got that current. Now, for most people listening here, they're not driving around. They don't have yen, but what they do have is they've got retirement funds out there, self-directed retirement funds. We're talking about the S&P being at 1,400.
Right.
The Dow, at 13,000. Are there really problems when it comes to valuations in the market?
Right. Versus a hard asset, meaning the real estate that you're basically getting at 50 to 60 cents on the dollar, and you can't build them.
Yeah, it's a great time for people who've got these retirement funds that are just sitting there, because now they can just simply reallocate, reshift their investments, without any out-of-pocket cost.
Zero.
Yeah, and be able to take, from a market that's rebounded, and be able to buy a weak asset.
Yeah.
And I think that's the trade out there.
No, there's no doubt. And, what you'll see, you're going to see a lot of new businesses out of this.
Yeah, absolutely.
You're absolutely going to see
because it's a positive.
Because they don't have to be huge funds, folks. That's what the difference is. At every corner of the whole United States, all you tigers and tigers out there, get your thinking cap on. Because the bottom line is that right in your community, there could be businesses you want to operate. Steve Roach, Tom O'Brien, you stay right there, folks. We're coming right back.